Hello everyone, Alan T here. So in today's video, we are going to talk about how to find high risk rewards ratio trading opportunities. We as a trader, we always like trades that can give us high rewards, isn't it? Okay, so it is possible, okay, for you to find high risk rewards ratio trading opportunities. However, you have to know that high risk rewards ratio trades, they are rare. Number two, you need to hold longer. Also, you may have multiple entries in order for you to get one big win. In other words, some of the trades here may hit BE, break even, or you may have a few losing trades in a row for the same setup just for you to catch that one big win. So this is how it works. Okay, so it's not going to be easy. If you can trade through a period of losing trades, break even trades, or even missed trades, okay, and you are able to hold your trades long enough, like 50 days, 100 days, then yes, you are going to have this kind of high risk rewards ratio. Now, high risk rewards ratio, I'm talking about at least 1 to 6 and beyond, 1 to 5 and beyond. All right, 1 to 5, 1 to 6 and beyond. Okay, now how to find high risk rewards ratio trading opportunities? I'm going to show you in today's video. Now, before I show you how to find high risk rewards ratio trading opportunities, make sure to smash the like button so that YouTube knows that this is a high quality video and YouTube will share to more traders that need to see this. So thank you, and let's get started. All right, high risk rewards ratio is a combination of structure plus patterns. Okay, so now structure is a powerful confluence. Structure, it can be SR zone, S&D zone, or even SR flip zone. Okay, patterns can be any chart pattern such as wedges or the losing momentum patterns like head and shoulder as well, double top or double bottom, losing momentum pattern. So losing momentum patterns can be like losing outwards, something like this, or losing inwards, something like this. Okay, so these are the patterns. Now, when you see any of these patterns formed at any of this structure, like SR zone, S&D zone, or SR flip, you are going to get yourself a very high risk rewards ratio trading opportunities. Okay, so here's how it looks like. You may have SR zone right here. So previously this was a high, then the price drop, okay, from all the weird things here, right? Eventually the price go all the way up from a double top. Now, of course, this is a zone. The price can form like slightly away or slightly below. It doesn't matter. It doesn't have to be perfect. But let's say the price overshoot a little bit and form a double top right here. Now, this is a sign that because we have a structure, this is a structure that we want. This is the SR zone. And we have a double top right here. So we know that we can look for a sell signal right now. Then we can place a sell and our TP can aim all the way up to maybe the low here or the origin here. So if we aim to the origin, we can easily get a 10R opportunity. How cool is that? Okay, so it can be on demand area as well, or in this case, let's say supply area. So the price go up and then drop, and then eventually, let's say this is a supply area right here. This is a supply zone. What happened here is the price crawl all the way up from a maybe a losing momentum pattern, a rising wedges, right? What happened is when we have this, because we have a supply area, supply zone, and we have a pattern, this is a losing momentum pattern. Because of this combo, we can now look for a sell opportunity, okay, somewhere around here, sell, and we can aim all the way down to the origin. So in this case, we can easily get 6R to 10R returns. Now, you have to know that this area here, it takes time. For you to see this setup like this, it's rare. And because the price may not get ready that soon, okay, you may have multiple tests before the price commits and drop all the way down. Because of this multiple tests right here, because the price is not ready, you're getting in early, what happened? You have break-even trades or you have some losing trades. But if you have faith, you know what you're doing, you trust your trading plan, then you know that, oh, this is nothing. You just get in the next time you have the same opportunities and eventually you will get that big win. All right, so it's very powerful. Okay, let's say we have an SL flip here. So let's say the price drop impulsively, the support, which is now become resistant. So this is SR flip. And then eventually the price came all the way back up from a head and shoulder pattern. We can start to look for sell signal. When we sell here, now we can look for our TP maybe at the origin. This can easily give us 6 to 10 hours or even more sometimes. All right, so your stop loss will just be slightly away at the safe area and your TP will be at the origin. This is the sell scenario. For buy scenario, it looks like this. The price go up. Okay, so the price return, maybe this is a double bottom area. And what happened is the price form a head and shoulder, let's say. All right, and we can start to look for a buy signal right here, TP aim at the origin. If we have SR flip, so now we know that, oh, this is the SR flip, so we know that the previous resistance, which is now the support area. What we do now is when the price return, then we wait for a pattern to form. Now it can be a losing momentum pattern, it can be a double bottom pattern, it can be a head and shoulder pattern. Then we can look for the buy. Target will be at the origin. This is how we get high risk reward trade. All right, let's say this is the demand area, same thing here. We either wait for a losing momentum structure, we either wait for a double bottom structure, or we wait for the head and shoulder pattern to form, and then we take the buy opportunity aim at the origin. Okay, this is how we can capture high risk reward ratio. Now remember that it takes time for this type of setup to form, and it's incredibly rare. You may see this few times a year, but not every week. And you may have to hold longer, right? You may need multiple entries just to get that one big win. Now, it's incredibly easy because all you need is just a structure and a pattern for you to be able to capitalize big win. Let me show you on the chart so that you have better understanding and you can see how powerful it is. So number one, let's say we have this structure. So we have what? A previous support, which is now a resistance. Then what do we have? We wait double top formation to form. So we take the sell. Now, when we have this double top formation, then we can start selling. We have this, let's say we place a sell order here. Our stop loss maybe around here, just slightly away. TP at the origin. Now, 127 risk reward ratio. As you can see here, the price drop a little bit and then go all the way up, test again, test again, test again. It takes the price around 25 days to fill. Now, is it worth it? 25 days, you make 7.6 hour. Now, if you risk 1%, which is 7.6 return, if you risk 2%, you almost get over 15% return. 3%, which is more than 21% return. How cool is that? And then the price drop, tested, test again. Now, this time the price form a double bottom right here. Do you see? This is the low. Now, it doesn't have to be perfect. It's a zone. The SL zone is a zone. So we have a double bottom right here. After the formation of this double bottom, we can start to look for the buy setup. Let's say the price is here. We place 50% entry. Stop loss below. Let's make it 80 pips. Oops, 80 pips. Our TP will be at the origin, which is 5.5 risk reward ratio, and it got filled in just 15 days. 15 days, you make a 5.5 hour, and all you do is just wait for the structure to form and take the trade. Now, this could be a resistance area, but because we don't see anything here, then no trade for us, right? And here, what happened here is, I believe we do have something. Yeah. Okay, so the price tested the structure again, but how does the price go towards this structure? In a losing momentum pattern. So maybe I place a sell order somewhere around here. This is a safer place for me to sell. Instead of selling here, you can sell here, but it will be too aggressive. I want to wait until the price breaks some kind of low. So I place my sell. Let's say my stop loss is around 60 pips. Now I can place my entry at the low here. Okay, or I can place my entry at the origin right here. So I place my entry at the origin, which is a 12.54 risk reward ratio. Now, because it takes time for the price to go there, I will have to manage my trades when the price break a new low. I need to manage my trade, then manage here, then I get taken out somewhere around here. So I think it's a 1 to 3, 1 to 4.9 risk reward ratio, around 1 to 5, right? And then what happened is the price go up again, unable to break, go up, formed the next test, right? a losing momentum structure. You can still look for a sell signal for you to sell all the way down right here. Now, let's move on to the next one. Let's see, this is the low. What happened here? The price tested the low here. Finally, it broke. But of course, we waited the price to break out the structure, so we can't get in here. Otherwise, the entry will be too big. We can use some other methods, such as use Fibonacci area to determine maybe a 618 retracement. So in this case, we can enter late based on this setup, but we enter based on the retracement. So let's say we get a 618 retracement. Let's say we enter here. Stop loss is just 50 pips. TP. Now, where do we set our TP? Let's say at the top here. This will be easier to fill. Okay, 115. All right, and do we get filled? I believe so. Yep, we got filled. And what happened? How long it takes? This is a 1 to 14 risk reward ratio, and it took the price 116 days to fill the target. All right, it takes a very long time for the price to go there. Now, you place this trade, the price stuck here for, let's see, 25 days. A lot of traders will unable to hold 25 days or more, or even less, because especially when the price is in sideways. All right, so and then when the price started to move, okay, you are excited because it's too close to the entry, and then the price drop all the way down again, then you get chicken out again. Right, that's why majority traders feel they are unable to trade through these types of up and downs. But if you're able to have faith, guess what? You're going to make nice profits, right? So what happened next is we have some kind of structure, the resistance right here, and boom. Now, this could be a losing momentum structure as well, okay? Or you can treat this as head and shoulder, where we have a mini left shoulder right here, head, a mini right shoulder. So you can sell after the candle formed, stop loss just away, 50 pips, TP at the origin. Now you can TP at here, which would be easier, or you can aim all the way down to the bottom, which I would not recommend, is too low. So the safe one most probably is 50% of this whole move. How? Like this. We move from, we measure from the low to the high, aim for a 50% retracement right here. So which is a 1 to 8 risk reward ratio, and how long it takes for the price to reach that level? 56 days. All right, so 50 plus days for you to get 1 to 8 risk rewards, but the commitment actually starts right here. So once the price committed, it takes only 12 hours for the price to reach there. So market is lower than you think. You don't know when will the price commit, okay? And you do not want to be too greedy. Always aim at the origin, right? Aim at the right place will be easier. And in this case, I think we have some kind of structure right here. This was resistant. The price broke, come back, go up again, test, this time form a double bottom. Now, after this double bottom, this is the double bottom structure. This is the double bottom that we want, okay? A little bit shy, almost there, but again, as I mentioned, it's a zone. It doesn't have to be perfect. Now, once the price broke the structure, this is when I will look for entry opportunities. Again, because I come by here, the stop loss will be too big. It's not worth it. So what I do is I just pull my Fibonacci tool and wait until the price make a retracement. This is when I measure the 618 retracement. I place a buy once I see the price is going up. So maybe I place a buy around here. Stop loss. Let's see if I can get 108. All right. So 108 and 40 pip and stopped. Okay. So TP can be at the origin here, which is the supply area. This is definitely a supply area, and it got filled 1 to 6, almost 1 to 7 risk rewards ratio. Now, because the price stopped at supply area, what does the price form? Head and shoulder pattern. Now, because of this is a head and shoulder pattern, I assume this is the right shoulder. I can place a sell order right here with 45 pip stops. TP. Let's aim all the way down to the origin and see it's a 1 to 8 risk rewards. All right. Let's see where we get filled. Let's see if I can get smaller TP. Now, if I use aggressive TP, I can get a 1 to 10 risk rewards, and boom, it got filled within 57 days. Okay, so 2 months. It took 2 months for the price to get there. Now, the price stuck around here, around this area for 41 days. And then the rest 20 days, the price dropped all the way down. So the commitment starts like 2 weeks later or a month later, right? So it's not easy for the price to go your target fast. The market is slower than you think. Then we have nothing, we have nothing, we have nothing. We may have something here, but it's too old, it's okay. Let's ignore it, look for a new one. Here. So what do we have here? This is a resistance, which is now a support area. Now again, it's a zone, it doesn't have to be perfect. The price reached this level, form a head and shoulder pattern. So structure, we have it, head and shoulder pattern, we have it. We have everything we need. This is when we can place our buy order. So let's say we place a buy here. So let's say I place a buy limit order and my stop loss is just 30 pips. My TP at the origin, right? So 1 to 10 risk rewards in just how many days? 8 days. How cool is that? And then we have one more right here. It's not perfect, but yeah, we have it. So what happened here is the price broke support, support become resistance. We do have a double top pattern, but the price dropped immediately, so we don't have any entry opportunities. You can enter here based on the break and retest, or you take the 618 Fibonacci. So you can place your entry, and then yeah, you may get out at break even, but it's fine. Here, almost there. Then head and shoulder, the price drop. So this is when you can place a sell order somewhere out here if you consider this as the right shoulder. So stop loss 30 pips. TP, maybe let's aim for a 618 or 50%. So right here, 1 to 7 risk rewards ratio. How cool is that? Now, you won't get this setup that frequent. As you can see here, it's rare. I have to wait for months for a setup to form, and yeah, but it's worth it, right? It's a very, very powerful structure. If you're able to master this style of structure, you are going to perform very, very well in trading. There must be something on the left here. Yeah, all right. So it's a supply area. This is a supply area. What the price form is, the price go into the supply area, form a losing momentum structure, and eventually it broke. So when the price drop all the way down here, this is when I can look for a sell entry. So I place a sell here, stop loss just 30 pips, TP all the way down, it can be here. Or I take a 50% retracement, and it got filled right here, 1 to 9 risk rewards ratio. How cool is that? Okay, so I've shown you multiple examples on how it works, right? We have the same thing here. At first, it was a head and shoulder pattern. This is when we place a buy and then the price dropped, so we got break even. That's when we see, oh, you know what? This could be a double bottom structure. Then we have a double bottom, the price go up. This is when we decided, oh, you know what? Let's place a buy again. All right, so in this case, the stop loss is small. TP, let's put all the way up to the supply area, or you want to be at the high and easy 1 to 7.79 risk rewards ratio in 13 days. How cool is that? So if you are able to find the structure, combination of structure plus a pattern, then you are going to have a very high quality setup. Same one right here, right? We have a break of a structure, then we have a double top. So we can sell the double top, and then we got out at break even. That's when the price form a head and shoulder, right? The left shoulder, the head. The right shoulder, this is when we can sell, TP all the way down, maybe to the origin, and boom. This is, I believe, easily 1 to 10 risk rewards ratio. Let's say we place a sell right here, 20 pips. Yep, easily 1 to 10 risk rewards ratio, right? How cool is that? I hope you enjoy this. I hope you test this out. And again, okay, this sharing is based on my own personal experience, my own sharing. So you got to make sure that it works for you first. Okay, if it doesn't work for you, then don't take this type of patterns. But if it works for you and you're able to wait for months for setup, you're able to hold for weeks or even months for your trades, and you're able to enter again and again, you are going to make a very, very nice return based on setup like this, a pattern together with a structure. Then you are going to perform very, very well. So if you like this video, make sure to share, like, and subscribe to the channel so that I can create more content for you. So my name is Alan T, and I will see you in the next one. Bye-bye.